Well, hello everybody. It's February 15th. This is the weekly review where we try to look at what happened, what it pretends for the near-term future, next week, and certainly the next few weeks, and then take a look at the portfolio holdings. Kind of a guide to the kind of thoughts of where money should be put, how much, that type of stuff. So let's get started here. Last week, big week up. That was on top of a prior big week up. What you should notice here is that the NASDAQ was the leader. So when we look at that, we can see the NASDAQ is the one that's pushing. That's going to be important, and we'll see that here in a minute. But in general, got exactly what was ordered from the prior week, and that is that if we look here, we got that little pullback, right, and then the push up, and I didn't mention this in last week's weekly broadcast. I did mention it in the notes on, I believe, Monday, and was saying that if I think about what it would take to get out of this mess, this range that we've been in, and remember we were talking about these big spikes, up and down for the last 9 weeks. And when we talked about those, there's 1, 2, 3, 4, 5, 6, 7, 8 of those over a 9-week period. And when I talked about those, it kind of, it hit me. It's like, okay, the way this is going to break, and we were thinking it's going to break soon, one way or the other, either down or up. And the way it would break is that rather than have these spikes on a weekly basis that go all the way to the top or all the way to the bottom, what we needed to see was something that didn't do that, right? So in other words, we needed to come back and hold somewhere, and that's exactly what happened, leading finally to the breakout. And so that scenario plays out nicely. We're over the highs, break of a swing point high here. That gives us the breakout. So let's go back to the notes here before we get too to digression, right? And look at the technical and the fundamentals. So if we look at the quick review, we got that small retrace I was just talking about, a good probability extending now as a result of it. The other big piece here is the NDX led the rally, and that's what I was kind of referring to here at the top, where the tech sector was the big strong one. And that's good. That's what you want to see. The problem is that this on a daily basis now, on this time frame, has almost completed its ABCD structure to the top side. So that rally led by the tech, perfect scenario. It's exactly what you want to see. Multiple swing point breaks here, as you know, right? That usually leads to what? It leads to 2 to 3 bars. So you got the breakout here, bar 1. We probably should see another one. That would give us 2 to 3 bars. Now, the good thing about this, right? Well, the bad thing I just said, it's extended, right? It's almost to its target. Probably not going to go that much more. The bad thing, the good thing, is that now you have the big ABCD structure here in place, as well as the range trade breakout that can take this much farther on this time frame. So that's an important thing to realize, is that extended short term, but this thing can go a lot farther, and we'll look at those items or those projections here shortly. Moving on, the other indexes, they got another 2% or so to run on the daily charts. So let's go back to the S&P 500. If we do the projection here and look at it, you can see that this has farther to go, and we'll look at those numbers independent or in particular here in a second. But that could keep us moving higher, and what that means to me is that for this to do that, we're going to see that rotation type action take place. So in other words, the tech will it's done its push, tech's going to pause, and we're going to see that rotation take place elsewhere if we're going to get those moves higher. They've got another 2% or so to run, and as we'll see on the projections, there's a lot to go on the weekly charts. The earnings, if I look at it from a fundamental perspective, the earnings were a bust. The economic news hasn't been that great. What's driving all this is QEs, right? QE is driving this in Europe, and then also various rate reductions around the world, including and importantly in China. China is trying to stimulate as well. You know, it's the central banks that are making this move again. If we look at the technical negatives, that NDX we just talked about, the other piece of it is the bonds are actually playing out to a point here where they are suggesting that we may be reaching some sort of a consolidation period before long, not only on the NDX but on the rest of the indexes. Here's the swing point highs, 127.72. We're coming back into it. We have volume on this time frame, but really the time frame you have to look at here is the weekly. That same high, 127.68 roughly. We're coming back into it. Volumes creeping down, right? That was that spike high in October when we made the October lows. So it's coming back into that to do a retest, regenerate bullish. The amount of bars, 1, 2, 3, 4, 5, if we do come into it, it would be within 6, right? It would be on the 6. That says we could get to the low, but I suspect you're going to see a bounce first. That suggests to me that we're going to see the market, for whatever reason, we're going to see the bonds spike back up, probably push back up to this high, 132.49, right? And then come back down and do some more testing. This looks to me like this is probably in some sort of a range trade now. As a matter of fact, let's look at it back here on the weekly. If we're in a range trade, you know, that range trade could be all the way down to here because that's kind of the two ranges that are in effect. If it pushes all the way here, I'd be very surprised. It's possible. I do expect some sort of a bounce like I was just talking about back up into this area, and then some prodding and testing back down into here. How far we get on this initial push remains to be seen. What this does potentially set up is some sort of a bounce ABCD structure to get it down into these lows. Don't know that that will happen, but it could. If this plays out this way, what would that do? Well, that would jive with what we were just talking about, where the markets move higher on a weekly basis, right? And this one moves back in deeper, gets us out into the May, June time frame, and then potentially, right, MTTFs will be extended on the markets and so forth and so on, and then we might get some sort of a larger correction. So right now, it all kind of looks like it's starting to set up to where we get some sort of a consolidation fairly soon on the dailies, some sort of a, you know, back and forth type stuff, then the push, again, the other leg higher on the weekly time frames, pushing us out into the May, June, July, somewhere out there, and then that's where maybe we see something larger in terms of corrections. And if we think about earnings in the next quarter, which start coming out April, May, that may be where it all happens, and we'll look at that also here in a second. So let's continue on. Dollar consolidating. This is another item that's worth considering, and that is that if the dollar's consolidating, the markets can continue to push. And if we look at it here, you can see it on the daily doing that. And if you look on the weekly, it could come all the way back into this low, which is 24.43. And so I see the dollar, it looks to me like this is consolidating versus just busting higher. And that also is supportive of this market wanting to move higher while this thing just simply goes sideways. Now, if and when the dollar takes off again, which maybe is out in that May, June, July time frame, that of course could be the next series of problems, because on a long-term basis, you know, if I look at the dollar on a long-term basis, it looks to me like it wants to go test these highs, and you know, some sort of, I mean, we've had a huge push, so some sort of consolidation that lasts, you know, 3, 4, 5 months maybe, and then the push and maybe the breakout. Yeah, that could all play out. So, you know, something in the background to consider and to keep watching. ABCD structures. right? They suggest this is going to move higher as long as the range, along with these range trade breakouts. Let's look at some of these numbers. Here's the range trade breakouts. So if I go to the S&P 500, and let me pull this up and get the weekly. Here we go. The range trade is, there really was, the S&P has two. The rest of them have one, or roughly. The S&P had this one inside, right about there, and then it had this larger one outside of that. And so it's just gotten over both. Well, it got over this one last week. It just got over the top of the large one on Friday. And so when I'm looking at those range trade breakouts and I do the projections on those, on the S&P 500, they're 2140, 2214. So let's bring back up the daily. 2140, let's take this off. 2140, whoops, let me go back and get the numbers. Yeah, 2140 and 2214. So if I come back to here, if I do this ABCD structure from here, up, back down, and then up again, what I'm going to see is that one projects to about 2136. And so we're seeing both a range trade breakout from this smaller range and the ABCD structure both culminating in about the same spot. That gives me some decent confidence that we're going to try to make it to that area, about 2136, 2140 on the S&P 500. If I look at the others, and I'm going to kind of dismiss these bigger numbers until we get farther out and see what the structure looks like. If we look at the range trade breakouts here, of course, these are all big numbers on all of these because they're nothing but the large ranges that are in effect. So if I go to, let's go to the Russell, for example, and if I do the Russell has this range that's been in effect for a long time, and I'm kind of discounting this last spike down and just counting this large range. So if I say this range here, right, from there to there, you can see how large that is. That's a huge range. And so we're just getting over the tops here, so forth on the others as well. So I'm kind of discounting these larger numbers until we get farther out to see how the market looks. Taking those ABCDs on the daily though, S&P 500 another 1.87%, NASDAQ 1.49%. If I look at the Russell, another 2.4, and if I look at the NDX, it's almost there, which is what we were talking about already. So that tells me that probably a little more push, some sort of consolidation. If you think about what's happening in fundamentals, geopolitical, all of that, it kind of dovetails with what's happening in that we now have kind of the Ukrainian situation where we have the ceasefire that's come into effect, which got us the little push last week. If that holds and now you get some sort of Greek solution, maybe that's that pop up that takes you up to that higher number, 2136, 2140 on the S&P 500. So you can see how all these things may just simply fall together and work out that way. The fundamental positives is the QE and ECB in particular. We've got some better economic data has been coming out of Europe, and China also continues to stimulate. The negatives, economic data domestically not good, hasn't been good, and I suspect what we're going to see is we're going to see the fundamental picture not get better in terms of earnings. And that, to me, is going to be the issue as we get farther out, farther down the road here. And what is farther out? Well, Alcoa will report again. It's kind of the beginning of the earnings season. It will report in April, the first week of April, April 8th, I believe. And then the following week is when we start to see most of the earnings, or actually the first big names, the Citigroups, the Wells Fargo, all of those. And so from a calendar perspective, right, that gives us about another 2 months before we get out into that period where I suspect these earnings are not going to be particularly good. Maybe we'll be discounted okay, all right, by then. I don't know. Earnings have a lot to do with what you do in front of them. If we drive higher into those earnings, it's probably going to be an issue. If we drive higher, pull back, then go into the earnings, maybe it's not. We'll just have to see where we are when we get there. What to watch this coming week? I would be focused on the rotation. Does it happen? And when I talk about rotation, let's look at a couple of items here of places that we might see it. The kind of thing I'm thinking about here is like, for example, transports. You can see an ABCD structure. It's not big, but there is an ABCD structure here. This could take us back in here, test this high. Right? That's the kind of rotation I'm talking about. Get us back up above this high, set up some sort of a pullback, potentially another one. I want to see this market broaden out, go over to other sectors, right? Ones that have lagged or ones that potentially have done well recently, but that are, they're the ones that, they have to step up, right? Technology can only take you so far. XLE is another example. I mean, this thing's been beaten down, still in a down market. Still from a perspective of the market, this thing's still in a downtrend on the weekly and the monthly. But on this time frame, hey, it can make it back up into the gap. That's another place that we could continue to see some rotation. Another one, XLI, for example, the industrials. We've seen the Dow lagging. The industrials have lagged. This has an ABCD structure. So when I'm looking at these and asking, okay, where's the rotation going to come from? These all come back to the highs, finish off ABCD structures, right? Break, and then set up retraces that can go farther. That's the sort of stuff I want to see happening and what I'm going to be looking for this week. And then, of course, the other big thing is what happens in Greece. I saw some news right as I was coming on to record this where it looks like there's some progress being happening there, and so if that does continue, then that could be the sort of thing that projects us or pushes us higher. Earnings in economics, most of the earnings are over. I mean, Walmart, I think, is the last big one. Cisco was last week, got a nice big bump off of it. We got markets closed tomorrow. We got one Fed speaker on Tuesday. A lot of central bank meeting notes going to be released this week, so that could be some flavor, some color coming into the market in the PMI. But I think, when you think about what's happening, what happens with Greece, that's the biggest thing. And then if I look down here, the FOMC meeting minutes on Wednesday. There are also some flash indexes that come out into the week. I think those will be important. So from a fundamental standpoint, it really is backside Wednesday, Thursday, Friday. If we see a Greek solution on Monday, by the time our markets open Tuesday, we could see that rally Tuesday, Wednesday, right? And then maybe some sort of a consolidation after that, maybe off these PMI numbers. Geopolitically, Ukraine, finally a ceasefire. It's not clear if it's going to hold, but if it holds, that is a big deal. And of course, the Greek situation. Bottom line, we finally have the breakout, right? We've been patiently waiting, continuing to position ourselves for an extension of the trend higher with the knowledge that it might not happen, right? I mean, we've been in a situation where we did not know if it was going to break topside or to the backside. And you know as well as I do, you have to protect against that backside if it breaks, right? We had that swing point low down there. We had that range right to it, right? That would have been multiple swing point lows, multiple time frames break if it were to break. It held. Now we get at the opposite side, and now we have the potential for a larger move. But we had to wait to see that it was going to happen. But given the overall trend, as I've said over and over again for I don't know how long now, right? Given this overall trend, you have to keep positioning to the upside. You have to assume this thing will continue until we get confirmation that it isn't. And that just hasn't happened, folks. I mean, you know that hasn't happened. It may set up later this year. If I look far enough out and I think about it, this is probably going to end up a swing point low October 1st last year. If we pull it back, look at the weekly, that's this low. This one would be the first break. Let's say we don't extend all that far. Maybe we go up to the first set of targets and that's as far as we get. And then we kind of consolidate up here and then eventually break these. Well, then that becomes a big deal, a really big deal. And so we could see potentially some significant change in the behavior of this market come the middle of this year. But we don't know that. All we know now is that this market has broken. We've tried to position that way and stay that way. We put on a lot of exposure this week as a result of that, and we expect this thing is going to push higher and reward us. And by being patient, not losing our money, now we can try to take advantage of it. So the bottom line is that we have the potential for headline news to knock us down, in particular Greece, but this technical picture now finally favors another leg up, and that's what we have to be focused on. If we look at the portfolio, added a lot of stuff last week. BCS, DOX, SZTS, SOX, and the SPY, and Sony. So we put on 6 names last week, ramped our exposure up as a result, and almost 58-59% invested at this point. Would like to be a little heavier on the long side, but now what we have to do is, now that we've established more positions, ramped from 30 to 58, we almost doubled exposure. Now we have to take and try to sell some of the exposure on extensions, add to exposure on pullbacks, and the first one we should look at here is the SOX, with that idea in mind. So looking at the SOX, now just like we were talking about on tech, right? This guy has made its move, right? It's already down here, made its move, almost extended to where it's going to go. 2 swing point highs up here, and if we look at it on the weekly, swing point high also on the weekly. This looks like the prime spot that this thing should pull back, right? Take a break. And that's the opportunity for us to add. The first test on the way back would be a retest regen off of this. You got 2 swing point highs in here. The buy points are probably right there at that retest and potentially down into this area. Now we bought it right back here as it was breaking out or about to break out, or maybe it was just a little higher, somewhere in that area. And so you don't want to see it come all the way back and you end up not making any profits. At the same time, what if it just keeps going? I mean, it's possible this thing just extends, right? There's nothing to say this thing has to come back in first. Probabilities suggest it will. There is a possibility that it just keeps extending. So then the question becomes, okay, how much risk do you want to take in terms of, do you take some profits here? For example, in this particular position, we have a 4% holding. Do you take any off or not? Well, the way I trade it is yes. You take some off right here into these extensions, these tests. If these tests take place, if you look at the high here, it's 96.03. You take some off right there. If it continues to extend, what do? Well, you try to buy the retrace if you're wrong. So let's just say it goes up to here and then eventually gets its retrace. This would be the retest regen now, right? Coming back into here. That's where you'd buy it back. So basically you get back in where you got out. And if you're right, if it goes the other way, so in other words, you come to this price point, that's as far as you can go, right? And you get the retrace, then you can buy it back down into this area, right? And you benefit from that first move. You take your profits there, you buy some more back here, and you try to get the next extension higher. That's the way I like to trade it. That's what I'm trying to do. That's what I will try to do here on the SOX of this week. So you'll see an order on the SOX to do exactly that. Apple, another example of the same thing. You can look at it on your own if you want. I'll take a quick look here and show you what I'm thinking, but exactly the same idea. So you can see here, for example, there was ABCD structures on the way up. Had one here, goes to there, back, completes, right? Get another one from there, back, and it's just about completed. If you look at it on the weekly, it's got a little farther to go, so you don't want to take everything off, but with Apple, we're holding 4%. Again, take 1% off. If it extends higher, then comes back, then you buy it. If it comes back in, which is more likely, you buy it down here and get the next extension. The same idea. So that's the way you can trade around these core positions, hold them, let them extend as far as they will, and then potentially, get back in at better prices and build the position a little bit more. Looking at some of the others here, I won't talk about each of them, but now's another one. Let's look at that one. Let's pop that guy up. This one actually has done really well. This one's extending as well. It's a young gun. ABCD structure here projects up around, I think it's around 91. So we've got a long way to go on this one. This is one of those ones you just try to ride it as best you can. Pull up your stops, just see how far it wants to go. Taking a look at one of the next ones. Oh, XLP. This is an example of one that hasn't done what we want. And if we look at the XLP from a perspective of the, let me grab the charts as well. If we look at it from perspective of the ABCD structures, right, these ABCD structures here are not that enticing compared to elsewhere. So in this particular case, it goes to here, back down, back up, which takes us right about to the highs, which has volume. Should take profits there. We have a lot of positions in the portfolio. We'd like to add elsewhere, so let's make money on this if possible at the test of the highs, because the idea here is that this thing is probably, because it's on the daily, you know, the projection is about another percent and a half. On the weekly, the projection is much higher, but it's not even in place yet. Well, actually it is, but you know, it just seems to me like this one's not going to do what we want, and probably not. It's not a big risk that we're not going to be able to get back into it. I suspect we can sell it there and try to buy it back here on the support zone. And I'd like to consolidate the money elsewhere if possible. NXPI, one more to look at real quick. And let's grab that guy. This one reported earnings, if you remember. It just keeps extending higher. And it did do an over-under on Friday. ABCD structures here suggest this thing could get all the way up to about 95, so I don't think we want to do anything. Some of these you just want to ride. This one, I promoted it to a core position, so we just try to ride it and not do anything fancy. I forgot to take AUK out. Let me get that out of here. That has earnings this week, so you know, we ended up losing that position. Don't have it anymore. And let's see here, Zeltiq. Zeltiq has earnings next week. Actually, not this Monday, but next Monday. So this one is, you know, I mean, this stock is amazing. We got into this and bought it on a breakout off the earnings before. I'll take a quick look at it with you again. Bought it on the breakout, bring over the weekly. Back here when it was breaking, I think we got it around $19, $20 on this big bar. And somewhere in here, I think, is one of the weeks we bought it around August, the first week of August, I believe. It's probably on this bar. And this thing has gone from, what is that, 19 to 36, almost a double. You can't ask for much more. I suspect this will come back in on earnings, and we'll try to buy it again there. Okay, so that's it for this week. You know, the thing to leave you with here, the thing to think about, is that the markets have consolidated for a long time. You know, and I don't talk about this all that often because we haven't seen consolidations last in these markets very long. But if I bring this over, you know, I mean, let me pull up the monthly. The last consolidation we have of any size was way back here, right? We had a little bit here. Usually these consolidations will go at least as long in terms of the future as they consolidated. So if I'm looking here at the weekly and saying, okay, how long did this consolidate? Well, it was basically 9 weeks. So I would think about 9 more weeks after this breakout in terms of how far it can take us. Well, what would that be? Well, that takes us out into earnings in April. And so I suspect that more than likely we're going to see this market try to work its self higher up until that time frame without giving any larger move down as a result. So that, to me, is probably what to look forward to. The last thing I'll leave you with has to do with those bonds again. You know, one of the things that we can do is look for a safer way to trade as this market, say, consolidates, is to trade the bonds against it. And so one of the things you'll probably see me try to do this week as this comes back into test is to buy the bonds with the idea that we can take, say, 128, 127.50 or something, and bring it back up to about 132, take a fairly large position in it as a contra play on the consolidation idea on the daily time frame, just as a trade against the equities that we hold, which will make it easier to buy those equities on any kind of retraces right inside that consolidation period, because the bonds, of course, will be moving to the opposite if that happens that way. Longer term, I think bonds will probably move back up and test these highs again, just as they've done before. And so I don't want to forget about the bonds, and with a nice drawback, it's probably time to look at them again. The last thing I would leave you with is that oil is also consolidating here. It looks to be consolidating. That too is going to help this market in terms of how it behaves in the coming days. And if I pull up the oil market, you can see a consolidation here. So not so much coming days, but coming weeks. Oil consolidating, market supportive is the way I look at it. Okay? Well, that's it for this week. That's probably enough. I'll leave it at that. Thanks a lot. If there's anything I can do to help, give me a holler. Take care. I'll see you next time. Good night.